Okay. Excuse me. Good morning, traders. I'll just wait. There'll be a few people coming in on. Give it just a minute to get online. Hope we're well. Just watching this Nikkei here. G'day, Jason. That looks not too bad to me, to be honest. I think if we go out a bit, so I don't know if anyone got this. I just put it up on the Discord channel. Put it up in the chat. Just to have a look at this. Keep an eye on that. I think there could be some weakness coming in the Nikkei. Just depends if we can get through this zone here pretty much now. Let me just make that a bit better. There we go. It's probably a bit more to the point. So yeah, we've got what you can see. You know, we've had this resistance zone. We had this push up to the highs, and resistance zone kept holding. Okay, kept holding through here, here, here. Let me just close something. Okay, this zone was holding through here quite a bit. And then what we've got is this inside level. We started to fail here, you know, a couple of times. We pressed down to straight back up, held a higher low, and then pressed up and failed again. Basically just through here. If you look at that on the, I think it's a 30-minute time frame, it looks a bit better than that. That little press through and then failure straight away. And then we've come in with a lower high on the open, still holding up on the open. It's still holding the level, which is it's not a concern, but you want to see some more pressure start to build. You don't want to be selling it, sorry, just here and then find that it bounces straight back up to the top end of the range and continues this chopping between the support and resistance zones. So really would love to see that press down and see if we can get a retest and hold something like that. I feel that's what could happen. Don't really want to jump in short because, yeah, even if you break this level, it might just be a flush. So we're going to talk about flushes in just a minute as well. It's really nice action on the currencies that we'll just have a quick look at. So that's the Nikkei. That's pretty much biased down for that at the moment. I think longer term we've got this trend up, which is, if I can get that, I think it's that one. This trend up through here. It's actually not looking too bad. I've got a feeling it's really hard on the CFDs. Let me just go to Nikkei on, because on the CFDs there's extra time thrown in there, if that makes sense. Yeah, so you've got these times when the futures market's closed, the CFDs go to the support, you take it across the support and it looks like it hasn't broken like that. I feel that this is more, sort of take it anywhere, can't you? This is more kind of what's happening, you know, especially if you've got the resistance through here, then you've got your little inside level through here, which failed. That's what we're just talking about. So really you've got this breakdown below 270, which I would expect to lead to some weakness, you know, continuation down. Because what we've seen is this press down, this trend is up as holding here, flush, just broke the trend, retest and fail at the low. We've got a lower high come to play, which could see, you know, over time, could see a good move down. So yeah, we'll continue to watch that. Prop into Dow. I'm a believer that they're mucking around with that Dow. Yeah, it's a thin market out of hours, and whether they're just trying, you know, it's more just, it doesn't seem to want to go down with the other markets, but it's happy to sort of plug away on the upside. If nothing really happens in the Asian markets, the Dow seems to be chugging higher. You wouldn't really be ticking it off if you want to buy stocks because you don't want this market to open higher. It just seems to be that's, you know, where they're supporting it just on the futures. I mean, there's any number of things. I was looking at ETFs too. I mean, they can support markets through ETFs. I don't know if it's happening. There's talk of that when they buy the bond ETFs as a way to, you know, the bond buying program. I think the Fed's buying the bonds, the physical ETFs, which sweeps the bond market and to provide support. There's no reason why they can't do that into equities as well. You know, you just buy an ETF. You don't have to go and support it any other way, but just buy the ETF and then it sweeps the market. SPY, yeah, that's true. I just don't like the SPY at the moment. So remember, it's actually a delayed open today because of the rollover on the futures and the options expiry. So it could be pretty volatile. Just keep an eye on that. Here we go. I've just got through that zone there. So anyway, we'll we'll keep going forward. The SPY, like I said, from SEP to DEC, it's the third Thursday in the month in the calendar, well, in the quarter, which is the current month. So September, third Thursday is today. You get the delayed rollover as they get all the prices for the futures. So we could see a bit of volatility. So really, I'm drawing these lines and you have key levels. It could be anything on the open because they tend to muck around with the matches, and then they'll lock it in as they go, to get the futures pricing, the settlement price on the futures. So with that SPY, if we can sort of pick up and we flush this level, we could get some weakness back down again. I mean, it's an each way bet with the SPY. You think you're going to get weakness and it ramps up, but you think you're going to get strength and it can just drop like a stone. So at this stage, that market's up. If we look at the physical index, it's gradually pressing higher. So being option expiry, it could, like I said, some volatility. We're getting a bit extended up here. It's still on the daily chart. That little pop up to the MAs, we could find more weakness. So it's kind of like the 30-minute looks good, the intraday looks good, the daily doesn't look so crash hot. But we've had this kind of action before. It's just a bit the way it's creeping down, here. And if we don't spike up something like this, I think we're coming from below the MAs rather than smack into the MAs this time. So the dynamics seem to have changed a bit on the ASX. I'm not saying we're going to get some bearish action, but it's not looking too crash hot. And it's a bit different to what we've seen in the past. Let's go over to, so that's SPY, Nikkei, let's look on the Hang Seng. Hang Seng, it's better to look at the index for this one. The index, although this looks fairly strong, I'm on the 30-minute chart. This doesn't look too bad. You've got, that candle yesterday wasn't so crash hot. And if you go and look at the daily, that daily to me, we've had, this action down. We've contracted back up again. We've held an inside, so we've spiked up to, this 26,800, give or take. Pushed back down, bounced, so kept that trend going, and then found the inside level, which is a lower high at 25,707 or thereabouts, 25,700. Now that's pressed down, it's broken that uptrend. It's whether from here you're sort of looking at it going, well, are we going to go sideways and range trade before we lift again, or are we going to start to roll? Now the daily, couple of good days up, and yesterday was a down day, so it was kind of not unique, but it broke the trend. So some of these other days we've had it gap down on the open and been bought up all session a couple of times, and it's finishing in the green. Whereas yesterday it sort of gapped up and then pressed down all session. I'm not saying that's the trigger. Okay, the day now we're going to start to head over. But if you start to look down at the lower time frames, just bearing in mind that this uptrend is broken. Like I said, we've come down into support. We've reacted up off support, potentially find an inside level at around 24,915. We'll just see what the shorter term. We'll go to a 30-minute chart. No, that's just in here. So a level about here. So that's the resistance zone in there. So we've even found on the 30, we found sort of minor double top just in here at 24,829. So it looks like it could sit on top of the MAs, and we still could lift from here. But if we start to tip over, I'll be targeting it and a push down through 24,638 because the MAs are really flattening out. It doesn't mean it's going to lift. It's just sitting on top of the MAs at the moment. So if this roll over and we start to fade here and we roll over again and start attacking the lows, 24,250, I think this could get a bit of a head of steam on the downside. But I mean, the problem is that the Chinese economy is actually doing not too bad. They're coming out of this pullback, this correction pretty well. And I think that theme is starting to get some momentum. So that's that. So Hang Seng I sort of got marked up. We could have a secondary day lower just to see, on the back of what happened yesterday. You can see that action up. We faded off this high. So if we hold 24,612, we still could lift. We could lift and rally back up, but just that momentum down is still intact. So if we sort of pop up, do a bit of a flush, and then ramp down, I'll be looking for a shoulder on the short side. Wall Street reacted quite hard off that 28,350 area. Reacted quite hard off there, smashed down. It's whether or not we're going to start to get buoyed in this support level that's touched 1, 2, 3, that zone there, or whether we need to go back down to test 27,920. Okay, the MAs are still up. It could sit on the MAs and start to lift again back up to 350, come to the European Open and US session. But again, we just have to wait and see a bit more action. I don't mind. I sort of think we might grind higher. If we're going to go lower, we sort of grind higher and then squeeze them out on another move lower. But again, I'm always that not biased, but I'm more. I mean, the Nasdaq looks like it's rolling a bit, finding a bit of pressure. But the Dow's getting bought up a bit more than that. It is. If you go over and look at this is the market. So S&P was sideways until the Nasdaq got hit, bang, 4 o'clock. That was on the Fed announcement. So the Fed is going to keep rates on hold. They are looking at inflation. So they're going to keep rates on hold to try to let inflation not get out of hand a bit, but it's going to be, they want it above their 2% target. Okay, whereas previously they've probably looked to raise rates, but now they're going to let it go for longer. So they don't expect, what they said is not, they don't expect to raise rates until, say, 2023. Now that's a long way off, and the market sold off quite hard. Now they're talking it up, the Fed's more dovish, but I think the market was expecting more from inflation and a bit more of a dovish outlook, saying that inflation is going to be a problem, blah, blah, blah. What the market could be looking at now is further stimulus, because the Fed is also saying that we need to, get more stimulus into the system. Which, why would you be saying that if you think it's going to be an inflationary problem? It doesn't make a lot of sense. They're saying one thing, but sort of showing something else. So I'm a bit suspect, and I think the market could have been too, that even though they're saying one thing, they're asking for further stimulus. Well, you only ask for further stimulus if you think there's going to be a bit of a problem to support the market. And inflation, they're saying it's not going to be a problem until 2023. Well, that's a couple of years away. So if it's going to be a problem, it's going to be a problem starting from now and creep up. I can't see them, if inflation is going to start to lift, that they're not going to raise rates anytime soon. But if they're staying out to 2023, that's a long time away. So it doesn't seem that inflation is going to be as much a problem as a lot of people thought. Now, if we go and look at that, so the Dow was actually heading higher and then got slammed. Obviously, it's the same, but it was already on an upward trend, whereas the S&P wasn't. And the Nasdaq was drifting lower. So the S&P was being dragged by the Nasdaq, and it's the big boys, the FANGs. You can see Facebook 3.2% down, 2.4% down on Amazon, Google, Apple. They're all hit, and that put pressure on the Nasdaq. So whether or not longer term we're going to start to roll and we're going to start to test down to 11,000. Now, we'll just go over to the daily, just want to see, because I think it's quite important on that daily. We are holding still below this level, 11,571. Okay, that press down, that break of uptrend, like I said, it's one of two things. We've had this thing before: break, consolidate, go. Break sort of here. I guess you were looking, we'll do this again. If I can get that, there you go. So before, that was sort of the trend up. You're looking at potentially that trend up. We break in here and rally again. Okay, so maybe that's a trend up. You break again. We just keep continually flushing levels. We did it again here. So it's whether or not this is a bigger flush on a bigger scale, and we consolidate above this level at 11,100, 11,080, and rally again. But I think it's got a lot of work to do. The way that savagely come off the highs, it's got a lot of work to do. So I'm not a big fan of. I don't particularly believe that we're just going to consolidate and do the same thing. But I'm more inclined to believe we're going to hold this as a lower high in here, 11,550, say. Okay, so that's the idea with the Nasdaq. If that's the case, we're going to drag on the index more, and I think it would, if it's going to start to melt down a bit on the Nasdaq, it's going to drag on the S&P. We know that, and it's probably going to start to drag harder, and then I think the Dow will just go with it because it wants to play catch up, or it'll go along for the ride. Now let's get over to the dollar. There's a couple of things on a daily now. I just want to show you. So the dollar, obviously, you got this weakness in here. We're talking about that. It could potentially break up. It's pressed down, retested, then break. So that was again just after the US session opened. So there's been weakness in European session. Early to sort of late session, it's been lifting in the US dollar. If not, it's late session, it's the US Open. It's been lifting the US dollar. So it seems to be a recurring sort of a thing. They're buying the US dollar up, coming into the US Open, or at the US Open, around the US Open. So that's what you get that lift. It's about 10:30, 11:30 was the open. It lifted from there in the US dollar. And obviously you got this chop through the 4 a.m. Fed statement. Popped higher. So it's whether or not we continue on up and we start to trade up towards this highs, or we start to look towards the 94 zone. Okay, this looks kind of getting supported through here. I mean, the fact that it's a double bottom here, we've broken through this lower high, I'm leaning towards the upside. Now, that's not the case. It shouldn't be the case if we get further stimulus, if the market's factoring in further stimulus. If it's factoring in, I think it's going to start to look towards inflation now. So it's kind of, why do you, if you've got inflation, the economy's starting to grow, why do you need stimulus? It doesn't make a lot of sense. So why is the Fed saying it's time for more stimulus? Maybe they are concerned in some ways. I'm not sure why, how yet, but I'm sort of biased up in that US dollar, which means biased down on gold and your currencies. Now, before I go, I want to touch on one thing. So I've got, I was looking at this yesterday, and I think we were talking about this yesterday, saying, okay, that looks like it could rally, but it's more inclined to pop through the highs and then flush, like flush the highs and go. And what I've noticed in many of these charts, you'll see time and time again, it's flushing. And one thing, so I've got it's a 20 HMA and a 50 HMA, and this is just a weighted moving average. So the weighted is for the general direction of the market, the overall direction, but it's more you trading from these two, the two HMAs. I think it's a 50. Just check. 40, okay, 40, 50, same sort of thing. But what I'm looking at is the flushes. It's important to notice when you could get caught in the flush. I mean, this to me, like I said, look bullish. If you'll see this little move up here, problem is one made the faster made roll below the slow. So that's the case. It's probably going to be more likely a flush at that level. It's going to sucker in a few longs and then dump on it. And this is the prime area. You're going with the flow. You've got your shoulder starting to break down. That's where you want to trade. Okay, so this is on the US dollar if you're trading the index. If you go and look at, say, the euro, I think did the same thing. We're looking at this zone. Okay, looking at, okay, that's potentially a short. That could go, and it did go, but it was the same sort of scenario. We'd already got the two MAs rolling, and they were holding. So the 20 was holding, so the fast was holding above the slow, which is what you want to do. You don't want to be selling against them. You want to be selling when, somewhere in here, when they're below, and you've got to, I guess the moving averages are in your favor. So you want the faster below the slower for the sells and the reverse for the buying. So once you get them crossing over, it should be a bit of a heads up that maybe we've got some sideways action, maybe some congestion. I think that there will be times when that'll be a sell and it will run down, but I'll be inclined to wait for a shoulder. A shoulder when they roll over again. So if it goes back up above, the 20 goes above the 50 and it goes back below the 50, looking for your shoulder, and you're going with the trend rather than against it with the MAs. And you can see this did the exact same thing as the US dollar. It was holding, squeeze out some shorts, sucker in some shorts, trap them, and squeeze them back out. And here it really is your shoulder trade. Okay, you can see that flush held and it started to lift again. So that's really what you're looking for. Didn't go too far, but you still got a few points on that one. Go look at the Aussie. I think the Aussie did something similar. Okay, so did it here. Same sort of scenario. We had this uptrend pullback. The pullback was deep enough to let this MA roll over, held below, flush high, trap some buyers, and then pretty much dumped on them straight away. So that would have been a harder entry, but an entry break below this low after the flush, especially after that flush and finish below, and you're still with the MAs, it could be a good little entry short. Okay, and the same here. We did the same thing. Trend up with the MAs still holding 20 above the 50, 20 rolls. We got this sudden spike up to flush out the highs, drag in some buyers, sucker them in, trap them in, and then turn around and dump on them again. So if you can do something, just keep an eye on things like that. I think for swing levels, did the exact same thing here. It's probably, you'll see it more and more often. It's flushing levels. So now if I was looking at that level, I was looking for a potential, not sort of here, I think it was up, might have been actually here yesterday. We were speaking, it was here. We were speaking about that yesterday. Same sort of thing. I mean, I wasn't confident if you're going to go sell here, sell on the break, then put your stop above. That's quite a wide stop, quite wide risk. And you're coming into that support zone. I was more expecting that flush, and then we lifted. So this would have been probably an entry long, a bit late into the trend, but still, there's some really nice setups there. All right. So I'll call it a day there, but we're going to be back on live at 11 o'clock. Doing the live stream, and I want to talk about, I sent out some charts yesterday into Discord. If you didn't get those, just send me an email to support@tradesetup.com.au, and I'll send you out those charts. I'll just forward them on to you. If you're not part of Discord, feel free to send an email, and I'll send you the link to join in the live trading room. And we'll just go over those charts because I just want to go over the entries for the session yesterday. And basically how I'm trying to attack the market was really just trying to review, because there's a couple of moves that I missed, thought there was going to be weakness, and I just basically missed. I mean, the earlier one, which would have paid off quite nicely, and it would have kept me out of trouble on one of the stops I took. So I think it took 2 trades for yesterday, 1 stop, 1 win. But it would have kept me out that stop, and there would have been another entry. There was 2 entries, probably one I would have got stopped out anyway, which wasn't a solid one. The next one was positive, the third one was positive. So I'll talk about those, explain what we're trying to achieve and how we're trying to assess this market. So let's just see where the SPY is opening. So the Nikkei, okay, it's breaking down. So we'll see if we can get some sort of retest. I don't want this creeping down because I expect we're going to spike back up, but I'd rather see this smash down and then grind back up. It's 2 different things. Okay, so when you're grinding down, you expect a retracement. When you sort of thump down, your pullback's going to be shallow and you expect another leg down. So if we're grinding down here and we start to sharply push back up, I'll be a bit concerned that we're not going to hold a higher low back into the zone. The SPY, yeah, so just watch out for that chop. It's going to be fairly choppy for the next, I think, normally it's at 10 past. It could be 20 past, 25 past when the market's fully open. So, all right, guys, I'll finish up there. Leave us a like on YouTube. If you haven't subscribed, feel free to subscribe. And if you needed the info, email us at support@tradesetup.com.au and I'll rip an email back to you. Thanks for joining me, and we'll speak to you soon.